Hey, my name is Mel Stubbs. I'm here on behalf of Retirement Benefits Institute to talk to you today about your federal retirement and how to plan better for that. How does life insurance fit into your federal retirement, and can you use it to better plan for a successful retirement? And I would say for most people, yes, you should. While working, you have the federal life insurance, the Federal Employee Group Life Insurance. A lot of people call it FEGLI. You have that while working. Every 5 years that gets more expensive, and then into retirement it gets even more expensive. So if you need life insurance, that can be a very expensive way to give you that coverage. You also at retirement have a survivor benefit option where when you retire you're going to get a pension, and you make an election of what's going to happen to your pension when you die. You can get a little bit larger payment, and then when you die, nobody gets anything of your pension. You can do that choice, or you can leave a survivor benefit where you leave half of your check to somebody or a quarter of your check to somebody. This is an election that you make at retirement. So the first thing we want to look at is the cost. What does the survivor benefit cost, and how does that relate to life insurance? Now, the survivor benefit is a percentage of your pension. So if you want to leave half of your check to your, most of the time it's a spouse, but whoever you're wanting to leave it to, it's going to cost you 10% of your pension. So a $3,000 a month pension is going to cost $300 a month for this benefit. Another thing about the cost is hopefully every year you're going to get a cost of living adjustment. In retirement, if you're a FERS employee and you're 62 and over, you get cost of living adjustments if they have them. And most years there is an adjustment. Keep in mind the cost of this survivor benefit is tied to your pension, so as your pension goes up, so does the cost of this benefit. And over year after year after year, it can get significant. As we compare that to life insurance, when you get a life insurance policy, if you're trying to replace the survivor benefit, most of the time we are using a permanent policy, a policy that does not end. So we are not talking about term life insurance. We are talking about, nowadays it's called indexed universal life insurance. The old jargon was whole life, but it's going to be something that lasts forever. The cost of that type of insurance does not change. So whatever the cost is, that's the cost forevermore. So that's the first big difference, is survivor benefit costs tend to go up as you get cost of livings, and the life insurance does not. The second big difference is what happens to your beneficiary. If you die first, then survivor benefit, money gets left to the beneficiary, and life insurance, the money gets left to the beneficiary. But what happens if the beneficiary dies first? Can you change beneficiaries? With the survivor benefit system within the federal retirement system, the answer is no, you cannot. You have picked that one and only beneficiary, and should that beneficiary die first, it turns out that you will have wasted all the money that you put in there. Over a 25-year history of being retired, you could put over $100,000 into that system, and it turns out nobody's going to get any benefit. Well, that would not be good. How would life insurance be different? With life insurance, you have the ability to change beneficiaries anytime you want to. So for most people, they are leaving the money to their spouse. Let's say their spouse dies first. You can change the beneficiary to your kids or to whoever you want. But basically, somebody's going to get some benefit if you use life insurance. With the survivor benefit, you have to die for somebody to get a benefit. If your beneficiary dies first, then nobody gets anything. At your beneficiary's death, you would get to quit paying for it. So the one benefit is you don't have to pay for it any longer, but you don't get any kind of money back. You don't get to change beneficiaries. On the life insurance side, we already talked about how you could change beneficiaries to somebody else. But let's say you don't really have anybody else you want to change it to, and you'd like to just cancel the policy. Well, with life insurance, you would be accruing a cash value. So whatever your cash surrender value is at that time, you could get that back. Giving the same 25-year example, 25 years from now, you'll probably have $20,000, $30,000, $40,000. I can't tell you the exact number, but it is a significant number that you could cancel and get that cash back. So it just gives you more options. Another thing that's different about life insurance is it has some long-term care provisions built into it. If you ever need long-term care, if you need somebody to come to your house to help you with things, you can actually access the death benefit early, spend that money to pay for these type of things rather than spend your own money. The survivor benefit does not have anything like that with their system. Another scenario that is different between survivor benefit and life insurance, I call the back-to-back death scenario. I'm sure this probably doesn't happen very often, but there is a big difference here. Let's say you do the survivor benefit option. You leave money to your spouse. You die first, and your spouse collects 1 month's worth of a payment. And then your spouse dies. What happens to the rest of the money that's there? It's gone. Your spouse does not get to leave anything to anybody. They collect that 1 month, and that's it. So all the benefit dies with them. If we compare that with life insurance, let's say the federal employee dies, leaves $300,000 to their spouse. The spouse lives for 1 more month. So they take a little bit of money out to live on, but there is still a lot of money left over. When they die, that money would pass with their estate to whoever beneficiaries that they want. So the benefit does not die with the second person. I know that wouldn't happen very often, but it is a very big different outcome. One, there's a lot of money left over to beneficiaries' heirs, and one, there is not. So though it doesn't happen often, it is a key difference. So if we go over these differences of the survivor benefit, cost goes up, life insurance does not. The survivor benefit, you can't change beneficiaries, the life insurance can. The survivor benefit, you can't get any money back if the beneficiary dies first. Life insurance, you can. The long-term care provisions, life insurance wins out on that. And then also the back-to-back death scenario, life insurance wins. For a lot of people, when they see this, they say, I don't want any survivor benefit, let me go all life insurance. Well, let me throw up one warning for you. The federal health care is attached with this survivor benefit, meaning if you die as a federal employee, you die and you don't leave any survivor benefit, then when you die, your spouse gets kicked off the federal health care. For them to remain on the federal health care, they have to be on the annuitant roll. They have 2 ways of being on the annuitant roll. Either you have to leave them a survivor benefit of some sort, or they have to be a federal employee themselves. So if both husband and wife are both federal employees, then you don't have to leave a survivor benefit. You could replace everything with life insurance, and they'd still have health care. If your spouse is on TRICARE or some other sort of health care where health care is not an issue, then you don't have to leave a survivor benefit. But if health care is a big deal for you and your spouse must have the federal health care after you die, you have to leave some sort of survivor benefit. You can't leave zero. So for FERS employees, there's 2 other options. You can leave half of your check, or you can leave a quarter of your check. So a lot of times people pick, I'm going to leave a quarter of my check, and then the other money that they would have spent on the additional survivor benefit, they take that money into the marketplace and see what type of permanent life insurance they can get. Depending on your health and your age, the price will be different. But just know whatever the price is, it never changes. That's key. And even if the life insurance price is more than what the survivor benefit price would be, there are a lot more bells and whistles and benefits to you that make it worth it to possibly pay more. If your health is such that you cannot get life insurance at all, the great news is you can get the survivor benefit and you can pick the 50% option. You don't have to get approved for that. You're already approved. You just check the box. Now, the survivor benefit election is an election that you make at retirement. So if you are going to look at the life insurance route, you need to have that worked out and already in place prior to retirement. You don't want to check that you want to reduce survivor benefit and then find out that you did not get approved and try to go back and get more later because they won't let you. So as you're getting ready for retirement, you're going to want to know these numbers. You can check out retireinstitute.com, call the number on your screen, and they can put together a report just for you that shows you what your pension amount will be. It will show you what your supplement will be. It will show you these survivor benefit numbers and how it looks in the future. And you can see, is this something that I want to do or not do? And it gives you time to plan and make other arrangements before retirement. So before you retire, know your numbers. Go to retireinstitute.com or call the number. Until next time.